There are two reasons that the market moves. One is to move for liquidity, and the second is to move to fill an imbalance. Any other thing you hear people say about why the market moves, oh, there's an SMT, oh, we reacted off of a moving average, oh, the RSI, any indicator that they've got is telling them it's overbought or oversold. I used to use loads of indicators. I used to use a moving average. I used to use Bollinger Bands. I used to use an RSI, stochastic RSI, basic RSI. I used to pay for an indicator that would print a icon on the screen to tell me when to get in and out of a trade. And looking back on it now, that is the honestly, it's just laziness. If you are waiting for an indicator to tell you whether to buy the market or sell the market, then you are doing it wrong, in my opinion. Because these are the only two things that the market is moving for or moving towards. These are the lifeblood. The entire reason the market moves is for one of these two reasons. It is either moving to go and sweep liquidity or run liquidity or grab liquidity, however you want to phrase it, or it's moving to fill an imbalance. And an imbalance like a fair value gap, a volume imbalance, a volume void, all these things are imbalances, and those are the only two reasons the market moves. Now I'm going to explain exactly what each of these two things are and how I use these two concepts to read the market every single day and get somewhat of an idea of what it's more likely to do. So starting off with liquidity, obviously as the market is moving, it is always generating liquidity above old highs and below old lows. Now, that's all well and good to know, but relative equal highs and relative equal lows, as well as session highs and lows, are what you need to put emphasis on, or that's where I put emphasis on at least. What I mean by relative equal highs is a high that is just below a high that is older than it, a high that is more to the left of it. And by relative equal lows, I mean the same thing in reverse, but a low that has a lower low just to the left of it, or an older low behind it. ICT teaches to look for where the market is smooth. Where is the market smooth? And what he means by that is where are there relative equal highs and lows? Now you can look for these on any time frame. The higher time frame, really, the better. And obviously, if you have the higher time frame draw, then you can go down onto the lower time frames and look for maybe a lower time frame draw and liquidity to target for that day, or maybe to be the catalyst for the move that you are looking for. Even on Monday's price action / Tuesday's price action, the overnight session after Monday, look at this. We had an imbalance here, and it was filled, and then the market ran up. It didn't reach for any liquidity down here. There was no SMT, there was no indicator. There might have been an indicator telling that this is more likely to go up, but that isn't why it's going up if you trade ICT, which I do. I'm not saying that ICT is the best thing on the planet and that everyone should drop exactly what they're doing and trade ICT. I'm not saying that at all, because that's kind of the bad rep that ICT traders get. All I'm saying is I see it this way. This makes sense to me. If it makes sense for you, then try it. And now we bounced off of this imbalance. We filled it and left it. And where did we reach for? We reached for where liquidity was. And what I mean by liquidity, obviously, old high. So we had this session high actually. So it's a significant liquidity level, and that is the previous day's PM session liquidity. So we have the London session liquidity that's between 2 a.m. and 5 a.m. Then we have the pre-market liquidity that is between really 5 p.m. and 9:30. That's not really any liquidity that is significant to me. I'm more looking for London liquidity or the previous PM session liquidity. And what I mean by previous PM session liquidity is the PM session that has just finished in the previous day's trading from 1:30 p.m. until 4 p.m. That is an area where I will look for the high and low of that session and use that as a significant liquidity level. We also have Asian session liquidity, which is about 7 p.m. until 10 p.m. Now, I've looked into ICT's teachings a lot, and I can't actually find any time where he gives a specific time for Asia, but from my understanding, it is about 7 p.m. to 10 p.m. midnight, somewhere around there. It's not something I'll use a lot, but if I'm looking for Asian liquidity, really I'm looking for anywhere in that sort of range, that overnight session before midnight. After just diving into my notes, boys, I have discovered that I have it written down that it is 8 p.m. to midnight, so that is your session for Asia if you're trading the indices specifically. Anyway, back to the video, but while I'm here, I may as well ask you to subscribe, because if you subscribe, I'll keep these videos coming and you can help me get this channel to where I want it to be. So subscribe, boys. And we can see here that after reaching for that previous PM session liquidity, we dropped down and we filled an imbalance and tested this imbalance. Like, look how perfect that is. Like, it literally just ran just above it and then rejected and went down to the liquidity, and then it swept the liquidity and ran up. Like, how can you not say that this isn't what the market is reaching for when it hits these levels, stops in its tracks and reverses? Like, it just makes sense to me. I'm sorry if this offends you. I'm just speaking what I believe. I see this in the market absolutely every day, and I have done for about the past 2.5 years. So it's getting pretty hard for me to deny it, and it gets pretty annoying when I see people, even ICT traders, for some reason in the ICT community, there's a big emphasis on SMT. Now, SMT, go and watch ICT's videos. He teaches that SMT is simply like this. It's the cherry on top. It's when you've got all the other pieces falling together and you see, oh, there's an SMT. Well, bonus, I may risk a little bit more in this trade. I might be a little bit more confident in this trade. But by no means does ICT ever take a trade simply because there's an SMT. And if you do, then I don't know, maybe rethink your whole strategy, or don't. If you're profitable with it, don't listen to me. I'm simply a guy on the internet telling you my opinion at the end of the day. But that is just a little rant that I wanted to go on about liquidity and imbalances, and that if you are an ICT trader and you aren't putting emphasis on these two things, then maybe you should. Anyway, that's just my opinion. But if you guys are going to be trading today, tomorrow, next week, then I will wish you good luck and good trading. See you later, boys.